Do you want to make big profits in your next stock picks? Keep watching. By the end of this video, even if you're a complete beginner in the markets, or you just open a brokerage account or a Robinhood account, I'm going to show you how to read a stock chart, set up your first technical indicator, set up alerts through email or text so that you aren't glued to your screens, and give you a way to find new trade ideas so you can make big profits in stocks. Let's get started. All right, the first thing I want you to do is open up a web browser and go to TradingView.com. TradingView.com. And I want you to sign up for a free account. It's a really short form. They're going to ask for your email address and username, and they're going to send you a verification email, and it's really easy. But the reason this is important is because you're going to have access to charts, real-time quotes, technical indicators, and a bunch of other things that you won't use right away. Don't be overwhelmed. Just trust me. You want the use of this site. It's pretty amazing. It's going to tie into the automatic indicators that you can set up. All of this completely free, so you don't have to sit and be glued to your phone or your computer to watch stocks. So TradingView.com, let's get your account set up. And once you do that, log in and go to charts. And again, don't be overwhelmed. There's a lot going on this site. I'm going to walk you through it and give you just enough to get you going, just enough so that you have what you need to make decisions. So I just jumped into full screen mode, and this is a stock chart. This is actually Apple Computer or Apple. So where to begin? This field up here in the upper right is for ticker symbols. So this is where you would put things. If you knew this symbol, you would put this in and it would display a stock chart. This is a candlestick chart. There are a variety of settings. You can kind of play around with this and see what you like. I like these candlesticks basically show you the price range within an hour. So these are 1 hour increments. The time settings are up here, and that's what we're going to use for this video. And for you investors out there, this is not so much a day trading strategy, but something where you can get in, invest, and let trades run if you want to for days or weeks. And it'll work on all account sizes. So again, the quote window's up here. We're going to use Apple in this demonstration because everyone's familiar with it. It is really expensive. And set this time frame setting to 1 hour. So we look at 1 hour increments. The next thing I want you to do is go up here to indicators and strategies. So up at the top, one of these symbols is indicators and strategies. Click that. And we're going to just type in AO in the field, and we're looking for awesome oscillator. It's got a funny name, but it's actually been around for a while. It was created by a technician, Bill Williams, and a lot of people use this indicator. This isn't something new. This has been around for years. But I'll show you why it's important. It catches a short-term trend and momentum. This is really a good indicator to use to gauge your entries, especially in up markets and markets that are trending, like ours has been for quite a while. We've had a pretty good up market. So we're going to utilize the awesome oscillator. This will be your first introduction to technical indicators if you've never been introduced to them before, and I'll tell you everything you need to know. So indicators and strategies, go type in AO, pull up awesome oscillator, and we're going to add that to the Apple chart. So now you've got this funny graph down here at the bottom, and this is the awesome oscillator. And there's a lot to talk about, and you can Google it and you can read about it, but I'm going to give you what you need to know for our strategy. For us, for those of you with maybe small accounts or average size accounts, we're really looking for stocks that you want to buy and maybe hold. So this can be for kind of the short term or the long term. If you buy these and you don't get stopped out and don't hit kind of your loss limit, and I'll talk about that in a little bit, you could stay in these stocks for as long as you want. So this is a good indicator for that. The way this works is we're really looking for entries where the oscillator, as price moves over time, it dips below a zero line and then it comes back up. So really simple strategy is when the oscillator crosses from a negative value to a positive value, that could be a buy signal. I'm going to put another caveat on that. Things aren't as simple as that for this system. But with this oscillator and scrolling back in time, we'll take a look at Apple. You can see it fluctuates. These are actually entire days down here at the bottom. This is the beginning of October because, again, these bars, every one of these little candles is a 1 hour candle. It's a 1 hour time frame. Price move from this point to this point within that hour. So with the awesome oscillator, what we're looking for is we're looking for a cross from the bottom upward. And that's going to be a buy signal. That would be if you want to invest in Apple and this crosses over, given one more condition I'm going to come to in a minute, you could place a buy entry. So that's how we're going to use the awesome oscillator. The caveat on this, I will say, is if you get a buy entry, a crossover to the upside from the bottom, you can only buy whatever stock this indicates on an up day in the market. So remember, the key point here is you can take buy signals, but you can only take them when the S&P 500 is positive on the day. So if you get a signal and the SPX, that's the symbol for the S&P 500 that we're going to use in this video. And what you'll do is you'll get a signal from the oscillator if the S&P is positive, not negative. That means in general, stocks drop for the day, then you could take the entry. So there's our entry criteria, very simple. Our stop loss or exit criteria. Let's talk about the stop loss first. Stop loss should make sense for the position size that you have for your account. If you're taking all of your account and just playing one stock at a time, then you are being very risky. I'll say at that point, don't risk more than, say, 5% of your account. And 5% is a lot. You can use this strategy and you can buy 1 or 2 shares of a bunch of different stocks, more of a long-term buy and hold strategy. If that's the case, then I'll say you're going to have to learn to look at the chart and look at the most recent, say, low in the past 4 or 5 days. That's where you would put your stop loss. So in this case, let's go back to Apple to have this make a little bit more sense. Let's say we wanted to take this buy entry here. Where would we place our stop loss? Well, we look past 1, 2, 3, 4. Here's the 4 days on this chart. Let's go a little bit more. Your stop loss should be somewhere around here. So you're going to have to consider how many points that is on this entry. It's actually about 10 points. But for Apple, which is a $200 stock, that's really only about a 5% move. But if you're kind of a buy and hold or a longer term strategy, you're going to place your stop somewhere around here. If you wanted to use the full body bars, you could place it around 216, 217. So somewhere at that point, if the stock reaches that point again, you decide you're wrong, you get out and you move on and you wait for the next investment idea. So the next interesting thing is, and the reason this tool is so great, by the way, if you want to add to your watch list, you just type in a symbol, that's Bank of America, and it pops in your watch list. So what you're going to do is use this watch list after you sign up and make sure you have SPX added to your watch list like I do here. And then if you're using TradingView, you can just pop it in the markets. But you'll see this on any brokerage platform you have. If you log into Robinhood or Fidelity or anybody else that you use, the S&P, it's kind of the main indicator of where the markets are. You've probably heard the Dow Jones Industrial Average and the NASDAQ Average. Those are good too, but I want you to use the S&P 500. All right, so on to the next factor. We've talked about how to take an entry, a crossover in the awesome oscillator. We talked a little bit about stop loss. That's where you're going to choose to exit if the trade isn't going your way. The coolest part about TradingView and the fact that this is free is that you can set up indicators to let you know when this happens, so you don't have to sit and watch the market. So if you'll right-click on either spot on the chart, but I'm going to click down here to where the awesome oscillator is. If you right-click and hit Add Alert, so the condition is awesome oscillator, and we're going to do crossing up, and the value is it crosses above the 0 line. I'm actually going to make this just a little bit above there so it doesn't get you. So the awesome oscillator, when it crosses up the value of 0.10, it's just like a little fraction. As it starts to turn and it crosses that middle line and goes up, the options only once. I only wanted to email me or text me once, or you either. Then the expiration time, you can set this till the end of the year. It all depends on how long you want to consider Apple or whatever stock you choose as an investment idea. So we'll put December 25th. This talks about the app, and it says notify an app, show pop-up. We're going to click send email. So your email is tied to your TradingView account. So this is going to email you when Apple has one of these signals on the 1 hour chart. And even cooler, you can choose the option send email to SMS. So this is pretty cool, and this is free. If you go to the site that it indicates, basically it gives you all the links to all the major mobile providers, like in every country. And what you do is you put in your mobile phone number, and then the next piece. For example, I'm AT&T in the US. So I'll show you how this works. So here's AT&T, and it gives you this suffix. So I'm going to copy this end part. The first part is going to be your mobile number, and we'll go back. So I would put in my phone number, and then the suffix, and then hit save. So what this does is the email that it's going to send you, it's also going to text you. And here's the message down here. The oscillator is crossing up on Apple in the 60, this is in minutes, but 60-minute chart or the 1 hour chart. And then you create this alert, and now it's out there till December 25th. And anytime this happens, you'll get a text message. This allows you to not be glued to your screens, not be glued to your mobile phone, waiting for trades and that kind of thing. You'll know when this happens, and you can set it up for many different stocks. And we'll talk about that in a minute. As you find new trade ideas, you add them to your watch list. It will take a little bit of setup, but now we've got Apple set up, and we're watching it for these conditions till December 25th. It's pretty cool. All right, so again, you can add more stocks up here. Let's talk a little bit about different trade ideas and where you may get them. So with that, we're going to go to a different site. It's finviz.com, Finviz.com. And again, there's a lot going on here. Don't get overwhelmed. I'm going to show you exactly what we need to do. I'm going to go to Screener. And I'm going to put some conditions on this. On this first spot, these are all kind of parameters. I'm going to specify some parameters here. I want you to go over to current volume and set it to over 1 million shares. I want you to set price to over $5. And I want you to set analyst recommendation to buy or better. So why did I pick these values, and why do I want you to use these values? I'm not encouraging investing in what you may have heard of as like penny stocks or super low price stocks. You hear a lot about that on YouTube or on the web. People buy these 10-cent stocks hoping they'll double or triple or what have you. We're not going to do that. Stocks below $5 are below $5 for a reason, and that usually means they've got problems. So we're going to avoid those problems by only considering stocks over $5. They have to trade at least 1 million shares a day. Again, that goes back to the same thing. We want stocks that trade. We don't want illiquid things. You can get hurt really badly by stocks that don't trade very much. It's just not a fair market. The market makers have a lot of control. I know I used to work for one. So over 1 million shares a day. And then we want analyst recommendations or buy or better. This all ties into stuff on the web. But we want stocks that analysts follow. Why? Because analysts will help your case. If it does look like a good deal and a good bargain, they're going to put out buy recommendations, and people follow those. Companies follow those. Industry leaders follow those. So we want this analyst recommendation too. We want stocks that at least analysts are looking at. If analysts aren't looking at them and there aren't recommendations on them, they're probably not worth anything. The last indicator I'm going to go with, and this is a little complicated, but we're looking for a price to earnings ratio. So if you click to all and look for PE, I'm looking for PE, P/E, price to earnings ratio of under 25. So altogether, we set up 4 different things. We said it's got to be over $5. It's got to trade at least 1 million shares a day. It's got to have an analyst recommendation of a buy or better, and a PE of 25 or under. Why did I set up the PE that way? We don't want stocks that are overvalued. It means the price is really high compared to the money they earn. For me, that's a kind of an easy indicator to know whether the stop's going to double or triple or that kind of thing anytime soon. High P ratios are bad. Low PE ratios are good. So under 25 is a decent area. It gives you a lot of stocks to look at. With those settings on all the stocks in all the markets in the US, there's 15 pages worth of stock share. There's at least 200 things to flip through. So this is where you can do your own homework. And I'm not saying you have to look at every one of these. The other thing you can do is, what products do you like? What companies do you follow? I picked Apple on purpose because Apple is so popular in the US today. But what other companies do you think are good? Put them through this screener, see if they qualify for these conditions. And if they do, go ahead and set the awesome oscillator up on those too. So maybe you think Bed Bath & Beyond is good, or Disney, or Alibaba, Amazon. But the way we have this set up is you can find lower price stocks that really haven't come to the forefront of the mainstream, like Apple and Tesla, because those are really priced high. You may not be able to afford to buy many shares of Apple or Tesla because they're over $200 a share. So I'm setting you up to look for other stocks that are reasonably priced that haven't really broke out yet. So this is the way to do it. Finviz with over $5, at least 1 million shares or better. Analyst recommendations of buy or better, and a PE of 25 or under. And if you have some favorites, if some friend or relative says, hey, I really like this company, go ahead and put them through this gamut and see if they fit this. Here's American Eagle Outfitters is on this list. These are the ticker symbols over here. So let's take that one, for example. American Eagle is AEO. So we go back to TradingView and we add that ticker symbol. All right, so here's American Eagle Outfitters. And here's a crossover. It looks like somewhere around October 13th-ish. So it crosses over. You could have taken the signal somewhere around here, and that was about $15, $15.20. You set your stop loss about 3 or 4 days back, so maybe somewhere below this, about $14. That's where you get out of it. Drop there. But then go ahead and hold it and let it ride. So let's just take a peek at this. I've never looked at this stock before. Let's see how this trade would have done. And again, you can choose to be a long-term investor and hold. For my recommendation, depending on your time frame, I would give things about a week or so to go your way. And then it's up to you. How much profit do you want? I would say if you make a 5% profit on a trade, to go ahead and take it. Remember how I talked about the 5% rule for taking losses? 5% profit on a trade. If you invested $500 into American Eagle Outfitters for a week and made 5%, it's really good. But if you want to hold it and see if it keeps going up forever, that's fine by me too. But it just depends on your goals. I think when you're just getting started, take small profits, get used to this system, get used to order entry and the things on your brokers. I'm going to put links to Fidelity and Robinhood down below on how to enter orders. It's going to go to their site and everything, so you understand how to put in a market order, which is what I think you should do. You don't have to put in a limit order and try to game it. When you get the alert, as soon as you can, maybe it's lunchtime in a work day, go to your phone and buy the stock. So let's see how this did. Here's a crossover somewhere around, I don't know, October 10th, it looks like, 11th, I'm sorry. So you got an entry, you set your stop down here, around 14. We'll just scroll forward and look at it. So you bought it somewhere around, I don't know, 15, 20, and since then, it's way up here. So 1686, so 1.5 points. Maybe you bought, if you had 100, if you had $2,000 or something in your account and you bought 100 shares, you'd be up about $150 right now, and it's only been a week. No, I'm sorry, it's been about 2 weeks. But $150 on a $2,000 account is about 7%, and it was never really out of the money. It dipped a little bit here, but it just went up and up and up. So that's how this indicator works. So with that, just a quick recap. TradingView.com, set up your charts, get comfortable with a watch list, continually add to it by the research you do on Finviz or suggestions from other people. Because you have this, you can log in anytime and it's going to keep the same settings that you have. So this will be a comfortable place where you'll be able to look at the stocks that you're interested in and set up those alerts. And keep open to new ideas. Head back to Finviz. Take a look at what you can find here or other people's suggestions, and just make sure it fits these kind of criteria. This will keep you safe. These are stocks that will generally do well in kind of the up market, the market that we're in right now. But that'll get you started. That's all you need to know to get started to investing. I've given you kind of the basic principles that'll keep you out of trouble, allow you to make some money. You can be relatively active, and you have the opportunity to buy and hold for a real long time if that's your strategy. So I hope this helps. If you have any questions, put them down in the comments below. And if this is helpful and you learned something from this, yeah, please let me know. I can create more videos like these. But I just want to give you something to kickstart you if you've never really bought a stock before, you didn't know where to begin. This is a simple way to get started in the markets. You won't get hurt and give you the opportunity to make some money. So thanks so much. I will see you next time. Good luck out there.